No, I got you.
Okay.
Good afternoon. Good afternoon. Thanks for joining us. My name is A.L. Johnson with A.L. Johnson Life Insurance Agency. Today, we're going to be talking about the stock market. This is the next edition of our Small Business Highlights segment, where we're taking small businesses in the Kansas and Missouri area and highlighting what it is exactly that they do for the community. This is a very timely conversation, especially after the events of last year with COVID-19 hitting us very hard. We saw a huge correction in the market, followed by a very quick recovery. And if, in fact, as of today, we're just a few points away from the all-time high. And so this is going to be a really great conversation. To aid me in this, I brought on an expert by the name of Zebulun Jackson with Edward Jones. How are you doing today, sir?
Hey, I'm doing pretty good. Doing good.
That's
Thanks for
good. That's
having me.
good. Awesome. So I got to ask you this, man. I got to ask you this. This is completely off topic, but you have such a strong name, Zebulun Jackson. Like that. That's a powerful name. Is that original or is that from someone else in the family?
Yeah, thanks. Yeah, no, it's definitely unique. My parents got it out of the Bible. One of the
Mm,
12
mm.
tribes of Israel. So, in the Bible, it was Jacob's son. So
Got
yeah,
you.
just
Got you.
they were reading it one night. They're like, that's the one. And then
I
just
see. I
I
see.
go by Zebulun, Zebby, all kinds of stuff. So yeah,
Got it. Got it.
yeah, I love it. It's definitely unique. It's something different.
Yeah, I saw that name. I said, man, this brother is destined for greatness, for sure. And
Thank
so, so let's get into it a little bit because I've got a bunch of questions. I've been talking to some of my clients. I've got questions from them that I'm going to be asking you about the stock market. That is a huge wealth generator. Too many people in our community miss out on that opportunity, whether it be from a lack of knowledge, whether it be fear of loss, but we just miss out. We miss out. And so
yeah.
the first question that I really wanted to ask you is when it comes to investing in the stock market, what are the top things that people should ask themselves? Because people ask me as an insurance agent sometimes, and generally I give them some pretty generic advice because that isn't my field. And so what I tell them is that you want to look at your risk tolerance because
Yeah.
in general, the more that you can make, you also have an equal potential for loss. And I also tell them to pay attention to their time horizon. And so their time frame, is this an investment that you're looking to cash out in the next 10 years, 20 years, or is this specifically for retirement and it won't be touched long term? From your perspective as the expert, what things should we be looking at when it comes to making those investment decisions?
Yeah, AL, you're absolutely right. The risk tolerance is, are you how much your comfort with risk? What risk are you willing to accept? Are you more aggressive or are you more conservative? And to help find that, we look at your time horizon as well. If you're nearing retirement, you can't afford to take on too much risk because of what happened back in March. If when the market was at a really low point, or back in 2008, if you were about to retire, then your money might not have been there for you. And so that's risk. However, if you look on the more conservative side, if you're about to retire, we want you to be a little bit more conservative with your investments. That way, it's more stable. We're not all up and down. We're just coasting a little bit. There's going to be a little bit of volatility, but nothing we can't withstand. So risk, time horizon, and then I say the biggest thing is just your goal. What are you working towards? Is one thing I always like to ask. What does retirement look like for you? Retirement is different to everybody, and some people want to be on the beach in Italy or something. Some people just want to be able to kick their shoes back and stay on a comforter or a recliner all day. So
Right, right.
it's just and so it's just, what does retirement look like to you, and just help you figure out what your goals are. Hey, it doesn't even have to be retirement either. It can be anything. What are you working towards? And we just use the stock market kind of as a tool to get you
Mhm.
there a little bit faster than maybe the banks can.
Now, with everything going on, so we know this year has been crazy already. We had the GameStop frenzy. A company that's
Oh my
basically like
gosh.
Blockbuster, getting ready to go out of business, on the verge of filing bankruptcy. A group of traders on Reddit decided, hey, we're going to go ahead and pump this stock up. And a lot of people made a lot of money. A lot of people lost a lot of money. And so my question is about individual stocks. So we see Apple, took off late last year, early into this year, and now is in the midst of a correction. We see a lot of individual high flying stocks. And so, as an expert, what is your thought on people investing in individual stocks versus, say, an ETF or a group of stocks?
Yeah, so individual stocks tend to be a little bit more riskier just because you're putting your money in one thing. If you put your money in a collection of different stocks, so say a mutual fund that has Apple, Amazon, Tesla, Microsoft, Facebook, it's you, if Facebook goes down and Microsoft is still up, you just kind of mitigated some risk right then and there. So that's why it's a little bit more to diversify. You get a little bit better chance of more safe to decrease some of the volatility. However, with that said, like GameStop, if you got in there at the right time, then that's gonna like triple what a mutual fund would have done the whole year. And so, however, it's just being able to time the market. That's the hard part. That's one thing we try not to do is time the market, because you got to be an expert or a genius to do that, and most people can't do that, even as financial advisors.
So, what is your thought? There's a lot of network marketing and the financial industry have merged quite a bit here over the last few years, and so there's like a rise of the average person, with a Robinhood account, or that are trading, say, foreign exchange market, or indices such as the Dow Jones, S&P 500, et cetera. What are your thoughts on day trading as a strategy to increase wealth versus the traditional route with stocks and long-term investing?
Yeah, so that's a good question. My thoughts, I would say day trading, again, just a little bit more risky. Just if you have the chance to make $20,000 in one day, you're just assuming a lot of risk. However, if you can, if you have the time to do so, and you want to take on that risk, then go for it. But yeah, it's just gonna be a little bit more risky than one thing we like to do here at Edward Jones is, because it's all about your goal and being able to have enough money over the long term. We're kind of long-term investors, I would say. So not putting your money and forgetting it in there, is putting your money in the account and letting it grow over the long term. And we rebalance at least once a year. Because I say that's the most important part. Things change all the time. So we want to keep you on track. And so we meet at least once a year and address what's going on new in your life. If you have any changes that we need to talk about, and then we address that and make the appropriate changes. But as far as these the companies like Acorns or Robinhood, they're great companies to get started, because I know one of the companies does the change from like a Subway sandwich or something like that. So it's good companies to, hey, 25 cents in is much better than $0 in. Getting it to grow. I mean, however, you can get started here. I think $25-50 a month or so. Put it in an account. Just do it consecutively. Systematic investing is what we call it. Do it a month. Out of sight, out of mind. On the first of every month, $50 is going to come out of your account. $100, $500 will come out of your account, and then get into your account. Here is still your money. It's just going to be invested. Just reaching whatever goal is most important to you, whether that's emergency savings, retirement planning, college savings, sending kiddos off to school, getting a life insurance policy. You help everybody out with that. Just whatever is most important. So
tell me this, because you brought up a good point. I was actually going to ask you that as far as investment amount. And so they can start as low as $25-50 a month. And I'm assuming that's going into like a mutual fund or something of that nature.
Okay. Yeah, the minimum mutual fund purchase is about $250, But hey, do $50 a month until we save $250, and then we'll buy you your first share of a mutual fund, and then do it again until we get to 500, or no, then it can be systematic after we get that initial 250.
Now, what are your thoughts with COVID? So we had this accelerated crash followed by the fastest recovery in history. It was it's really quick, and if you caught the bottom of it, I mean, you could have made just a ton of money. But that was scary for a lot of people. So a lot of people just really took their money off the table. And so when we're looking at moving into this year, we know that inflation is rising. I'm seeing the price of things starting to go up just a little bit. I know that one of the goals with investing is to stay ahead of inflation. What are your thoughts on the current landscape moving forward, say for the next couple of years? Are you advising your clients more towards bonds and safer investments, or do you still see the stock market as the more viable option moving forward here in the short term?
Yeah, I'd say stocks are greater than bonds. Bonds are greater than cash. Getting going with investing, even currently in this market right now, being able to be invested in quality mutual funds that are that have proven over time to consistently perform pretty well and have strong managers and are invested in the right companies. All a mutual fund is just a collection of different stocks, and so a collection of those different companies on the S&P 500 that are actively managed by fund managers. So think Prudential or Charles Schwab or Vanguard. Those are the fund managers actively managing. So what I do a lot is consulting with those managers and trying to determine what are some quality funds right now. Because even when the market was at the lowest of the lows, there were still funds doing well. And so that's kind of my job, is to find those funds where we can take on the least amount of risk and kind of get the most return.
Makes sense.
And we're going to put that in your portfolio and grow. So our job is to, I think with inflation right now, I would say we can still invest in equity.
Okay.
Which is going to be your stocks and your however, what we'll do is we're going to invest in all of it. We're going to have, with your retirement portfolio or college savings portfolio, there's going to be a little bit of bonds, or it'll be whatever your risk tolerance is. So we'd have to sit and talk about that first. But
right.
Most risk tolerance, say if you're 40 years old or so, say we'll do about 80% equity and 20% fixed income.
Got it.
And that's going to be bond. So we'll do a little bit of everything in there, just to hedge, because those bonds are hedging against the inflation of the volatility of the stocks.
Right. Now, when it comes to limits, I know there were some changes in I believe it was in the CARES Act, as far as 401k. What are the current 401k limits versus IRA limits?
Yeah, so 401k limits right now are $19,500 a year.
Okay.
That's how much you can contribute to your 401k. I say do 10 to 15% of your salary, but do at least the match. If you can, do at least the match if your company matches.
That's free money.
Free money on the table.
Right.
Yeah, exactly. Say they match 4%. I just want you to do it at least 4%. But if you can do 10 to 15, that's where it's at. But that way you can be prepared for your future. But and then Roth IRAs and the traditional IRAs, those limits are about $6,000 a year. So that's up to $500 a month or $6,000 a year. And that's the same thing with a traditional IRA and a Roth IRA. If you're 50 or older, then that's going to be an extra $1,000 a year. So that'll be $7,000.
So for the catch-up age, is that, if I remember, is it age 55 or 59, somewhere in there, where you can contribute more to your IRA?
That's going to be 50. Age 50.
Age 50. Okay. So at age 50, you can invest about 7,000. Below that, you can invest 6,000 in your IRA. And so when you got your Roth IRA and your traditional IRA, can you explain the difference between the two?
Yeah. So a traditional IRA, it's just going to be a pre-tax retirement savings account. So you're able to put money in there pre-tax, and when you take the money out at retirement, you'll have to pay tax on it. As far as the Roth IRA goes, that's going to be paid with after-tax dollars, and then when you take the money out, you won't have to pay taxes on it. Most people are liking Roths right now just because that tax bill can be pretty expensive. Say you save $1 million when you're 65, then 22% of that's $220,000 that you're going to have to pay to the government later on. If you had a traditional IRA. With the Roth, the whole $1 million is yours because you took care of the taxes when you out of your paycheck.
That makes sense. That makes sense because we don't really know what the tax rates will be in the future. Especially with all of the money that's being printed right now. It's definitely to pull us out of the recovery. People need the stimulus checks, to get on their feet. There's a lot of people that were hurt, but the long-term effects of that is that taxes are likely to go up in the future. And so what you're saying is if you got into a Roth IRA now and you were paying the current tax rate, it's very likely that you're going to pay less in taxes than if you waited 20 years from now and pulled out the same funds. Do I have that about right?
Exactly. Yeah, you're usually going to be in a lower tax bracket now than later. Yeah, so might as well just pay the lower tax now than when you're in a higher tax bracket and then have to pay more. And paying the government your money. So
right, for sure. Yeah, we want to pay our due. We want to pay our taxes. We want to contribute to society, but not more than we should.
Not more than you should. Exactly. There's some tax smart strategies to where it can all be legal. You're paying your taxes. It's just pay a lower amount.
What are your thoughts on Bitcoin?
On Bitcoin?
Yes.
Yeah, so Bitcoin, I get that question a lot. I think it's great. I think it's risky though. I think right now people are making a lot of money with it. Here at Edward Jones, we can't offer it just because of the volatility with it.
Right.
I think later on the government will regulate it. And so
I've seen some Bitcoin ETFs kind of popping up and things of that nature. And so is that just a Edward Jones stance on it, or what's the overall landscape of Bitcoin right now?
Yeah, so our stance is just that so I'm thinking my personal stance is that I believe it's gonna come with some regulation down the road, and to where the value of it's gonna come back down to what it might be worth today. And so that's what I'm thinking, that it's just a little bit riskier. Yeah, that's pretty much just
completely understand that.
I wouldn't invest in it for the long term. If you're trying to retire, I would not invest in it for the long term.
Now, there are a lot of parents who follow this page, and so I wanted to ask you something about college planning and just planning for your children's future. In selling life insurance, I'm a broker, and so I represent multiple companies, one of which is Gerber, and so they have the Grow Up Plan, which a lot of people confuse the life insurance between the college plan, but they're two completely different things. And so the life insurance does build a cash value. It's fairly insignificant. And then the Grow Up Plan is essentially an annuity. It's a deferred annuity that pays a small guaranteed interest rate. And so as a financial advisor, how do you help people plan for college for their children, or whether it be them making a down payment for their first home or setting them up with their first business? What have you seen as the best way to go about that?
Yeah, those are great strategies right there. I didn't think about the annuity. That's awesome. I'll do some research about that because might need to learn something about that. But right now, we're at Edward Jones. We just like to do either 529 plans.
Okay.
Which are going to be That's retire for the 18 years or so. That can be used for college expenses. It's also a tax-free way. Your earnings are also tax-free, which are pretty cool. If you use it for college expenses or room and board or even trade school. One thing I found out is that if the kids chose not to go to university or community college, they can go to trade school with the 529 plan as well.
I didn't know that.
Yeah, I thought that was pretty cool. And also, another thing is that if the kid chose not to go to school, then it can be passed along to the next child or anyone in that family as well, or the parent, I mean. And so that's what the 529 plans. We also like either Roths, investing in a Roth for the child.
Okay.
That you can use that for a college savings plan as well. It can be set up for the college you just got to put it in the kid's name because it stands for individual retirement account. That's what an IRA stands for. And so, however, it's meant for retirement, but one of the exceptions with the distributions of a Roth is that you can use it for a first-time home buyer. You can use it for for disability. You can use it for college education expenses as well. So getting set up in a Roth, and that way, I mean, 529 plans I think are great because it's if I have like $50,000, $100,000 for my schooling, that would just encourage me even more to go to school and do well and everything. So 529 plans can be great because it's like this money is spent because we save this for your college, so you're going to school. But however, Roth plans are great for you can use it for the kids' retirement. Hey, they can retire at 50 if they keep going, 40 maybe, if they didn't go to school and use the money for school. But yeah, so that's kind of what a Roth is for, or first-time home buyer in college.
Let me ask you this about final stage planning. And so with life insurance, I deal with that every day. People are looking for ways to leave the most money possible behind for their loved ones. And so life insurance is a great way to do that. But so is the stock market, right? And so can you speak a little bit about inherited IRAs and just kind of what that looks like, how it works, and how does that affect things from a tax perspective?
Yeah, of course. Yeah, that's a great question. That is like you said, a great way to leave a legacy for your loved ones. And that's one that happens all the time. You don't spend all the money in your IRA, or you save all this money, end up not needing it. So it's just let it grow for my daughter or son or grandkids.
Right.
And so and it becomes an inherited IRA if it's left over. Make sure you put the beneficiaries on there so it doesn't go through probate. So that's another tip. Always have beneficiaries on your account. For sure, that I love. Like some people don't have them. I'm always calling them. Okay, I just need a social security, a date of birth, and a name. Like just give it to me. But because it's important, because you don't want the government or taxes and takes forever probate. But as far as inherited IRAs, it's gonna be you have 10 years right now. Currently in the current laws is you have 10 years to withdraw distribute the money out of the account. And so you got to just make sure the money is out of the account in 10 years if it's an inherited IRA because it hasn't been taxed yet. And so the government is saying, okay, we need to start taking taxes on this money. And so they give you 10 years to do so. The financial advisor will walk you through how much and everything. The RMDs need to be required minimum distribution. But 10 years, and so that's pretty much it. You can reinvest the money, you can spend the money, you can, but we say reinvest it, put it towards your retirement. And so,
got it. And so for someone who may be nearing retirement at this point, and they're looking at the market. They see that we're at all-time highs. They may be, afraid of some correction happening too close to their retirement. It happened to my mother in 2008 when the market corrected itself. She was literally retiring at that time, and she had significant losses in her 401k, and she tried to work for a couple of years to make it back up, but it was just a little bit too far gone. And so for people who have that concern, how can they protect themselves in this current market?
Yeah. And that's what we would do. We would move it closer. We would move your portfolio more closer to bonds and cash and money market and CDs. Those are more conservative investments that aren't taking on too much risk. Because and that goes back to the time we were talking about. So risk and time, it all stems back to you're about to retire, then we're going to want to move your portfolio. We're going to sell some of those stocks and buy some bonds because bonds.
Now I've heard a rule of thumb, kind of like the closer you are to age 100. So say if you're 80 years old, you should only be in 20% risk, 80% safety. If you're 50, it should be kind of 50-50. Do you guys use that same rule of thumb?
Yeah, definitely. Yeah, pretty similar. Yeah, we do. Yeah, that pretty similar rule of thumb, just making sure that you're going to be okay. Because at the end of the day, it's all about you and reaching your goal. And so if you can't do that if your account is down 20% over and you're just about to retire, you can't do that. So that's why we got to meet often and discuss these things. That's all it is a discussion and an update to our plan. Once we get the plan together, we'll keep you on. The most important is just keeping you on track. We got the plan, which is the hard part, but I think the most important part is keeping you on track because changes happen all the time, and we're going to be rebalancing this portfolio to make sure what happened to your mom doesn't ever happen to anybody else because that's important. That's your hard-earned money. We want to protect it. That's about protection. You can't earn all this money or save all this money and then not have it protected. So.
Now I have a thought that I wanted to run by you, and I'm working on a financial calculator here. There was a question that I really wanted to ask. So we're here around income tax time, and a lot of people with children tend to get back pretty hefty income tax returns. And so I'm just running a scenario here. If a person were to get $5,000 for their income tax and they were to invest it, what is the average return of the stock market right now? What do you usually quote that at? 7% or what percentage? 7%.
Yeah.
Okay.
7.
All right. So if someone just had a child, this past year, they got their income taxes of $5,000, and they wanted to put that money back for say 18 years at the 7%, that future value comes to over $169,000. Might as well say $170,000. $5,000 invested, average market returns, 18 years, your child has grown, $169,000. Here's the question. Why do you feel people don't do that? Because it seems fairly simple and straightforward. There's no additional contribution. It's sacrificing 1 year tax return. Why don't we see more people doing that?
Yeah, it's just knowledge. I don't think a lot of people know how to, or we weren't taught this in schools. Our parents didn't teach us how to invest and what the stock market is. This is a tool of how the rich get richer. You just showed, you're rich with the 5,000 and people think they're rich, but if you invest it, you can get rich. Your money just made yourself richer.
Yes, this is insane.
You're pulling that out $170,000. That's crazy. And that's
I see it a lot.
Rate of return too. Imagine that was 25% a year, or something like that. We say average 7%, but hey, last year people were making 40% year rate of return. So
exactly.
It's just knowledge, and that's why I'm passionate about just sharing it. And I love your videos and being able to just get this message out to the world because it needs to be heard. Once people see those calculations, see the hard numbers, see what $170,000 can do, it can just what 5,000 did over 18 years. Yeah, that's exciting.
Yeah, the numbers don't lie. That's 7%. That's historical returns. That isn't Bitcoin. That isn't individual stocks. You're not day trading. It's in a mutual fund, set it and forget it for 18 years. And what I really find interesting about that particular calculation is the average 401k balance for someone who's getting ready to retire. So this is someone who's already worked for 30 years, is just a little over 100,000. It's just a little over 100,000 after 30 years of work. When a $5,000 investment one time for 18 years would bring you far more than that. Isn't that insane?
Yeah. I get excited about that type of stuff. So I studied accounting, and I love like the numbers. That's kind of how I'm like sold, like how I believe it. I'm like, show me the numbers, and it's real. People are doing that. That's a hard calculation with a strong conservative rate of return. $170,000.
That's crazy. So, what can you do? What do you feel we can do, like as industry professionals? You know, I'm always singing the praises of life insurance. Some hear me and some don't. You know, that's just kind of how it is. And I'm sure on your end you experience the same thing. But as industry professionals, what can we do to really expand this message and make it palatable for people? Because you know, it's one thing to let people know that something's out there and they hear it and it goes in one ear and out the other. But how can we make this more attractive and appealing so that more people can really touch financial freedom?
Yeah, that's a great question. I say just starting at home, really reaching out. Everyone thinks that we can just go so big, and just everybody has such big goals, which I love, but talking to your neighbors, talking to your friends and family, and having them share the message, and starting with your local community is kind of what I like to take that approach of just who can I help close by, and maybe they might know somebody who they can help, and just share that information with them, and then it kind of cycles. That's one thing. I'm like, I just tell all my friends, tell my parents, my cousins, all that stuff, and then just trying to share the message that I like. Because like I said, I didn't know this in high school. That should have been in the class.
It should have. It definitely should have.
2 minutes, that calculation. That wasn't in math class.
They didn't teach us about credit. They didn't teach us about how to buy a house, how to invest in stocks. Nothing. Definitely. So, man, I appreciate your help in this. The other thing too. So, like we just did that calculation, $5,000. You get that from your income tax one time. You can really set your family up. What do you feel is the issue in our community, specifically in the Black community, when it comes to spending versus investing? Because a lot of times, even with life insurance, I can quote someone a policy for $30, $40 a month, and they have to go back to their budget. You know, let me check my budget, I'll figure it out, and let me make room for it. But if a popular concert comes into town, they're there, you know, with little to no thought. You know, they go to the club, they go and buy new outfits, etc. And so, what is going on with us when it comes to consumerism versus investing, in your opinion?
Yeah, I caught a little bit. It was breaking out on my end, so I don't think I have good Wi-Fi here. But what I think is what's happening with our community is that we are. Yeah, like you said it. We like to spend. I mean, it's not just our community either, but everybody likes to get the 90 object. You know, we're marketed to all the time. You turn the TV, turn on an ad, there's always an ad or something. Just the shiny new thing that you gotta have. You know,
right.
You don't have to have. It's nice, and I'm a spender. I get it. I like to shop, but. You gotta just have in mind your long-term goals, and I think that's the message that's missing. Is everybody's so short-term, like, oh, I gotta have those new shoes or so. But okay, get the shoes after you did $100 a month in your Roth, just to make sure, because the biggest investment you can make, I think, is in yourself. And so just pay yourself first the $100 a month. Pay yourself the $500 a month because you earned it. It's your money. It's going to you for later on, and it's still your money. You're just saving.
Right.
You're just saving it, and then go out and spend. You can still have a cool lifestyle, but just I don't know, invest in yourself first, because that's why people are working 30 years and not having much to show for it in the end, and have to keep working and keep getting another part-time job. It's just because you want so much. And so I say, just do a little bit, and it's going to go a long way. I promise it will. You just did the calculation. So
that's beautiful. And just a little bit about your backstory, because we didn't get too much into that. I know that you said that you studied accounting. You graduated from Kansas University. You could have done a few different things. Yeah, rock chalk, man, rock chalk. But you could have done a few different things with that degree. What made you decide to become a financial advisor, and why did you choose Edward Jones to partner with?
Yeah, that's awesome. I chose financial advising just because I wanted to kind of work for people, not for a boss or doing the same thing all the time. And because I like numbers, but I wanted to work for. I wanted to tie that and my love for people together. And so this opportunity kind of presented itself, and I was like, "Oh, cool! Let me give that a shot." I never even thought. I didn't even know what a financial advisor was. You know what I mean? I didn't learn about that, and so it wasn't a career. It wasn't even a major at KU, and so I was like, okay. But so I went to a career fair, and this came up, and I was like, oh, looks like it can do both and whatnot. So let's try it, and took all these exams to be licensed, these hard tests. But that's kind of where I got this knowledge from, and the experience doing it. And so, but yeah, and now I'm loving it. Just Edward Jones, to take care of their people, they take care of their clients. It's always the client first, and so they're gonna take care of the client. The thing is, we don't even sell products. My job is to go find the best funds and mutual funds and stocks and stuff for my clients. And so, yeah, we're not shoving anything down anybody's throat. We're just gonna ask what is important to you, and then we have a 5-step process. It's basically, where are you at now? So we'll figure out kind of what assets do you have, what your expenses, do you have an emergency savings goal? Do you have the life insurance? Do you have a retirement account? Then we'll figure out where do you want to be? Like what dream a little bit with me. What are you working towards? Like, are you trying to, because not many people even know how to articulate it. Like, where do you want to be in 15 years? And that's the question nobody has ever asked them. And so,
right.
That's my job, is to ask. And so I sit down and figure out where we're at, where we want to be. I have some tools and whatnot to see if we can get there. How do we get there? What are the actual investments? What risk tolerance should we be at? How much time do we have to get there? And then the 5th one I was talking about earlier is just staying on track. We meet at least once a year. You can call me as many times as you want, but we can meet at least once a year to make sure it's you're still on track. So
now, this is one thing that really made me want to reach out to you and do this live stream is I've been in the sales industry, because we're both in the financial services industry, but it is sales, and it's a difficult profession no matter what area of sales you go into. And so I saw your promotion. I saw where you got your own office within 2 years. How in the world do you get an Edward Jones office in 2 years? You have to be working pretty hard. You work hard for your clients, huh?
Yeah, hard work. Yeah, hard work got me here. But also favor, God is good, and so
He is.
Yes, being faithful and doing the work. Faith without works is dead. So just doing the work and listening and telling and just serving. I would say serving. That's what really is. Because even being here doesn't mean I'm making hundreds and hundreds of thousands of dollars. It's a service. So I'm like, I work all the time just to get people to get in a better goal in hopes that later on that they will take care of me, and it comes back to you. So my thing is just I want to take care of as many people as I can right now, and then I could be set up for success as well. But so far, doing well, just I got my space. So now I just got to get people in it to fill it, to get some clients in here. So yeah. But
that's the goal here.
I'm helping people all throughout the metro area and throughout the country. We have licenses in all different states. So yeah, I'm just
okay. So you can help people in more than just Missouri. What states all are you able to help people in?
You said what states?
What states do you work in?
Oh, all throughout the country. Yeah, any state really. Our license. So we have the Series 66 and the Series 7, and then the life and health, and so that gives me access to help anyone in the country. So, and the one thing about coronavirus, I was really big on the face-to-face before because I think that's just more personal and you can really dig deep. But one thing I learned is that Zoom works too. So I've been doing relationships and getting to know people over the phone and on Zoom, and that's really easy for my clients in California or in Texas. So it's pretty cool. So I'm like, I still want face to face. So wear your mask if you want to come in here, but we can always Zoom or do a phone call.
Awesome. Well, Mr. Jackson, I appreciate your time, taking out time in the middle of your busy schedule to speak to my audience. It is a great thing. I appreciate you doing it. You definitely didn't have to. You gave us a lot of good information. Just to recap a couple of notes. When you meet with Mr. Jackson, he's going to go through a 5-step process to determine what your goals are, what your time horizon is, and your risk tolerance to determine what the best investment vehicle will be for you to reach your goals. He's a licensed advisor with Edward Jones. He's got a degree in accounting from Kansas University, and he just got his own office here recently. And so he's doing a great job for people in the community. He's all about educating. He puts God first. And he's just a great person to work with, So if you have any questions in the realm of investing in the stock market, Zebulun Jackson is their guy. He's your guy. Mr. Jackson, before we end the live stream, any final words, any last thoughts, and of course, give them your contact information.
Yeah. Well, thanks, Ale, for having me. I appreciate you setting all this up, and this has been a great time together. But yeah, just the investing doesn't have to seem so overwhelming. I know it's unknown and foreign to a lot of people. It was to me, and now I'm recommending things and different things, and making money, making people money with their accounts are growing. So it's just once you get started, it's a matter of just sticking with it, maybe getting something monthly or so, out of sight, out of mind. Invest in your 401k. Do at least the match. Get yourself the life insurance. Protect the unexpected. Things are going to come up, and we want to be able to leave a legacy. So just, thank you. And my contact information is I'm here on Facebook, Zebulun Jackson, on LinkedIn, same, and 913-403-1805 is my phone number. Edward Jones, you can look up in the Edward Jones website, look for me, reach out that way. I have my email and everything on there. So,
awesome.
Can't wait to meet all y'all.
Definitely. And then I'm just going to recap this because we got a live question. So I just want to address that. How you doing, Ms. Ford? She said that she missed the point about the $5,000. She asked, was that the amount that you recommend people start with? And so just for clarity, and definitely you can watch the replay. This will be on the A.L. Johnson Life Insurance Agency page, as well as the A.L. Johnson Life Insurance Agency YouTube channel. And so you can definitely watch the replay there. But what we were talking about is investing for college. And we were talking about the time frame of about 18 years. If a person were to invest $5,000 at 7% interest, which is the historical rate of return, they would have about $169,000 available. And so we were really just talking about the power of money gaining that compound interest over time. It's powerful, and a lot of people miss out on that. And so we just want to encourage as many people as possible. Income tax is right around the corner. A lot of people have already received it. Do the right thing. Put something back for your future and for the future of your family. And of course, Mr. Jackson here with Edward Jones is a great person to do that with. He's a great person to do that with. We got a couple thank yous. Thank you guys for tuning in. We definitely want to provide great information. That's what it's all about here. Again, Zebulun is with Edward Jones. You can Google Edward Jones, Zebulun Jackson. He's the only one. He's got a unique, powerful name, so he'll be easy for you to find. He's got a beautiful office, and he's really about helping people. And so,
yes, it's over by the IKEA over in Merriam. So over here in the city, right by the IKEA.
You're right off the highway.
That's and awesome. I have a lot more to share too. So yeah, come meet me. We can talk because I have even more. So yeah, come meet me in the office. Give me a call. We can get something scheduled.
Awesome. Well, thank you again, sir. I'll definitely be sending people your way. People, life insurance and investment is important. It is important. It's the only way that we can close the wealth gap. It's the only way that we can ensure a bright future for the next generation. It's about sacrificing a little bit today for a greater tomorrow. So I encourage all of you to review your financial plans, make some solid goals, and get with a professional to help you carry those out. Again, this is Andrew with A.L. Johnson Life Insurance Agency and Zeb Jackson with Edward Jones. It's been a great discussion. Thanks for tuning in. You guys have a great day.
Thanks, Andrew.